Welcome to Resilience and Resolve with Lance Drury.
Welcome to Resilience and Resolve. I'm John Clements here with tax attorney Lance Drury. Today we're walking through the IRS audit process, from what triggers one to how to get through it without losing sleep or your savings. And before we get into that, first of all, Lance, welcome back to the show.
Good to be here, John. Always great to see you.
Oh, thank you. Yeah, great to see you too. So today we're talking about what is probably the most nightmare-inducing topic I can think of, an IRS audits. So I'm glad we're here to kind of hopefully dispel some rumors, maybe spread some hope even about this process. So as we dig into it, can you just tell me what kind of things trigger an IRS audit in the first place?
Well, some of them are done at random. People are just selected for no reason at all. But for the most part, if there's something that you take as a deduction, which looks extremely high or it's out of proportion, or your business expenses seem to be extremely high, those things can trigger audits. There are certain things that are automatically going to trigger an audit. And the problem is you don't want to do this on your own, because whatever you say to the IRS, they're going to use against you. It's like talking to the cops. If you're charged with a crime, it's not a very smart idea to go in by yourself to the IRS. And in fact, a lot of audits go criminal simply because of what is said to the IRS auditor during the audit process.
Oh yeah, I definitely do not want that to go to the criminal route. That sounds even worse than just a regular audit. And I'm curious, we've mentioned in previous shows that IRS staffing is down and there's just a lot of problems that you're experiencing on a bigger level than ever before. Is that impacting like the number of audits that are happening or like how they're triggered or anything like that?
Well, in fact, audits are up from where they've been
Oh,
before. And part of that was with this increased funding. Now, we haven't seen a whole lot of reduction yet, but it's possible that over the course of the next several months that we may see less audits. And if you're in the state of Missouri and you have a state income tax audit as opposed to a federal tax audit, well, look out if you own a restaurant or a convenience store, because they target those a lot because they think people are always hiding cash in those two businesses. So we get a lot of audits in the state of Missouri for convenience stores and restaurants.
is that just because they're probably dealing with a lot of cash transactions, do you think?
I'm certain that that's a lot of it, and they feel like those people are hiding that. But for whatever reason, they want to go after those industries, which is why it's extremely important for you to have a separate bank account for the business as opposed to your personal, even if you're a sole proprietor. Because if you start segregating money, I had a woman once, she had put money into her business account, but it was her own cash. Well, she didn't leave a paper trail. So guess what? That was counted as business income because she had no way of disproving that. And then, in addition to having everything and all your ducks in a row by having a separate account for the business, then you know exactly what you're making, because all you're going to do is put the income from the business in there, only pay business expenses, don't pay any of your personal expenses from that account. And then you can tell at the end of the month exactly how much money you've made, because you got a nice, clean account there that's devoid of any personal income or personal expenses. And it's a lot easier to deal with the IRS because when you commingle those funds, it's hard to get a resolution sometimes because they can't figure out what is what.
Oh yeah, yeah. I can definitely attest to that. I've got an LLC and I definitely keep all that money separate. It's just a whole different thing because yeah, there's a ton of reasons for that. I never thought about IRS audit being one, but it definitely is. And I wanted to talk a little bit too about the process, because I think there are different kinds of audits. There might be a correspondence audit. There might be an in-person audit. Like, what's the difference there?
Well, the correspondence audit, we call them letter audits a lot of times, where they just send out a letter to the client that says you're being audited. Here are the categories we need to look at. For example, transportation expenses, gas. For a lot of businesses, that's a common one. And they'll just send it out and everything is just mailed in. You never meet with the IRS. It's all handled by letters, an exchange of letters. Sometimes there's phone calls, but most of the time, everything's done in letter form. And then you have those major audits where you either have to go in to the auditor's office in one of these metropolitan areas in which we have offices, or they'll come to you. And recently we had a major audit, and now we haven't heard from the auditor for some time. During the Biden administration, and I can't remember the exact name for this audit, but they do a line by line audit of your tax returns. And the auditor was in the Nashville audit every other Friday, all day long conducting. It was a nightmare. And so now we're just waiting to hear back from the auditor because the audit is basically complete, I believe, but we're just waiting for his findings from that audit.
Yeah, that sounds like an absolute nightmare.
It's costly. It's costly. It's time consuming. And I think in this case, what triggered this audit was some type of religious exemption that he took, which triggered this audit. So, I mean, it's just a nightmare. I mean, the guy's having to spend tens of thousands of dollars just to get through this audit process. And then guess what? After that, he's probably going to have all kinds of money that he owes. Then it'll turn into a collections case, and it could be hundreds of thousands of dollars that he's going to owe by the end of this.
Whew, that sounds rough. So in that, again, no one wants to go through this situation, but what rights does a taxpayer have if they're being audited?
Well, there's a couple major ones. They have the right to have a representative. You know, we don't want our clients to get anywhere close to the IRS or to an IRS auditor. Everything comes through us. They're going to talk to us directly. Our client is not going to be around. Sometimes, like, for example, these revenue officers or these auditors want to go to their place of business. Well, guess what? We show up and we tell our client to leave town until he's gone or she's gone, because we don't want them saying something that could adversely affect them down the road.
Yeah, I think it's very instructive how you mentioned it's very similar to talking to the cops, right? Anything you say can and will be used against you in an audit. So let's say that I'm dealing with an auditor. Maybe I'm not, for whatever reason, I didn't hire you to my own detriment. And what should I not say or do if I'm being audited?
Well, I would have you answer any questions. I mean, it could be a multitude of things. I can remember a client once saying and this was prior to our involvement, well, they didn't report cash because they had a friend who was an attorney that told them they didn't have to do that. Now, everybody knows an attorney would not tell them that, but that's the kind of thing that can get them in trouble. So that's why you don't want to say anything to those auditors. You don't want to get anywhere close to those auditors. And so that's a problem. That's probably the most critical point where you don't want to handle an IRS matter on your own. I mean, you shouldn't do it in any area, but that in particular, those audits, because a lot of them go criminal, as I said earlier, you don't want to try to do that on your own. And so I just had a case recently where the guy didn't hire us. He'd been dealing with the IRS on his own. He owed $1.2 million. And I'm sure he got a summary of taxpayer contact from the new revenue officer. And instead of hiring us, he lost all his assets, including $300,000 in a retirement account. He's in his 50s. And so I called him. I said, this is going to be my last phone call to you. I said, you could still hire us, but I got to tell you, now that you've been levied, it's going to be a much harder battle. I mean, if he had hired us, we would have worked with the revenue officer. And, if we don't have, we ask them, is there anything else you need? With the taxpayer, they don't do that. They just tell them at the end of this summary of taxpayer contact, I need all this. And if I don't, you're going to get levied. And so it's confusing. It's complicated to people. And invariably, they forget to send something in.
Oh, yeah. Yeah. So then with that, how are you able to shift the outcome of an audit based on these, bits of leverage and knowledge that you have?
Well, the primary thing is we've got to have documentation. If the taxpayer and we tell them this in the initial consult, they still want to hire us because they don't want to talk to the IRS directly. But the thing is, the audit's not going to be successful if we don't have documentation proving up the expenses that they've listed on their tax return. So it basically comes down, you've got to have substantiation. And so it's the same thing with a business that's audited where you transfer funds that are not business income into the business account because the business isn't doing it very well. You're trying to prop up the business with your own personal numbers. You better have documentation that that came from your personal bank account, or they're going to consider it as business income. And let me just give you a recent story. We just got hired today. A firm out of New York City hired us. They had a prior representative. They weren't happy with him. They Googled my name. And here is the horrors of the IRS. For 2016 and 17, the returns didn't get filed. They didn't know it. They thought the accountant had taken care of it. And they didn't owe any tax. But the accountant failed to list on the return Form 1095, which is the funds that they expected for medical insurance. And 90% or more of their employees are union. They sent the monies to the union. The union didn't take care of it. And, they didn't list it on their form because their accountant didn't do it. This is how horrendous the penalties are. For 2016, the IRS has slapped over $1 million penalty on them. And they are expecting that they're going to do the same for 17. I mean, that is just overbearing, overreaching. And the IRS does this with certain penalties all the time. If you don't have the proper forms, and they're going to slap on a horrendous penalty. We've been successful, though, in getting those abated, but we don't do it 100% of the time. So, you've got to watch who you employ because, if you own the business, you're going to be responsible even for what somebody else does, because you have a fiduciary obligation to know what's going on with that business. It's the same in my practice. I have 8 lawyers. Guess who they're coming after if one of my lawyers screws up?
Yeah, Lance Drury, that's who.
That's it. So, that's just something that you, as an owner, that you have to understand. Because I had a guy once. He owned the business, but he was just the money. The guy running the business didn't file all these payroll tax returns, and then he died. So then they come after my client for the trust fund portion, and the significance of that is now his personal income and his personal assets are at risk. And he almost got divorced over this. We got him a great deal, but he still wasn't happy. He wasn't displeased with our services. He was just so mad at the IRS for what they did to him. But again, he owned the business. He had an obligation to know what's going on. Everybody thinks owning your own business is the American dream. Well, it's a lot more work, a lot more paperwork, and a lot more responsibility. So it's great. I love doing it, but I have people that work for me that take care of a lot of those things. But if you're going to go into business for yourself, you need to educate yourself on what you need to do, not just with the IRS, but in general, because there's so much more paperwork, and these people work till 7, 8 o'clock at night. They come home and the last thing they want to do is paperwork.
Yeah,
but you got to do it.
Yeah,
but you got to do it.
And it sounds to me like for what we're talking about today, if you're just following good accounting practices, I think that's going to help you out quite a bit.
Yes. You need to do that. You need to get a top-notch accountant. You don't want to try to do this yourself. I have people that have done this all themselves, and they continuously don't send in the right amount of money for their payroll taxes. We even wrote a letter to the guy saying, here, you need to spend the money to get an accountant to do those returns so they're filed properly and you pay the proper amount, or you're going to continue to have these problems with the IRS.
Yeah. Like I personally have a very small business, but I still hire a CPA because I don't even want to mess with it. I want the professional to do it.
That's exactly right. That's just like, and we recommend that to a lot of people. I mean, I have but I'm not about to do my own tax returns. I hire the professional to do the returns. That's what he's equipped to do. And I'm equipped to help people resolve their IRS tax issues. So, people think that they're going to save a little money. Well, in the long run, a lot of times it's going to cost them a lot more money because they're not doing things in the proper manner.
Yeah, exactly. And I was curious too, going back to the audits, once you've resolved an audit, can it be reopened or appealed, or is it just kind of a done deal?
No, you can appeal it, obviously. The other problem, though, that happens is if they find problems with 1 year's audit, they may open that up to other years. So, if you're clean, if you come out and you owe very little money or none at all, then that's not going to happen. But if you have significant problems with 1 year, then they're probably going to open it up to other years. Sometimes you can negotiate and say, hey, we'll accept the findings if you don't open this up for two other years. And that way you can save your client a significant sum of money as well.
So we've talked, last question for today, we've talked a lot about some things that you can do to hopefully lower your risk of being audited, maybe not eliminate, but lower. So, having documentation, using good accounting processes, having your money in separate accounts, those are some big ones. Are there any other steps people can take to reduce that risk of being audited?
Off the top of my head, I can't think of anything else. Just do everything by the books. Don't try to skim. Don't try to hide stuff. Don't try to inflate your expenses. Sometimes we get people on the phone and they know that they've done wrong. They know that they inflated the numbers for their expenses, but they still don't want to go into the audit on their own.
Yeah, absolutely. Well, Lance, thank you for having a conversation today. I think it's been very instructive and enlightening about maybe making the whole process of an IRS audit maybe just a little less painful, especially when people reach out to you. So thanks for being on the show today.
Well, thank you very much, John. Always a pleasure to see you.
Yeah, you as well. And to our listeners, if you're facing an IRS audit, don't go it alone. Call the team at lancedrurylaw.com to get the representation you need.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.